A trader has many options when it comes to trading strategies. However, it is important to identify a particular instrument's average daily movement first in order to catch 100 pips a day. It is important to keep in mind that most currency pairs do not move that much during a single day. So it is important for traders to select an instrument that has sufficient movement in order to start trading according to their objective. Usually, exotic pairs and gold move more than 100 pips a day, and normally these pairs have a high spread. But today's competitive world has led to a drastic drop in spreads, giving traders a great opportunity to make money. Considering the XAU-USD pair is high volatility and has a daily average movement of over 100 pips a day, let's look at how we could catch 100 pips a day on 1 hour time frame. When the price is above SMA 50 and the market structure is making series of higher highs, we will only focus on buy trades and wait for the price to make a correction to the SMA 50 and closes with bullish engulfing pattern. This will be the signal candle, and we can enter a buy limit at the high of the previous candle, place the stop loss slightly low of the signal candle, and take profit is set at 100 pips above the entry price. Similarly, when the price is below SMA 50 and the market structure is making a series of lower lows, we will only focus on sell trades and wait for the price to make a correction to the SMA 50 and closes with bearish engulfing pattern. This will be the signal candle, and we can enter a sell limit at the low of the previous candle. Place the stop loss slightly high of the signal candle, and the take profit is set at 100 pips below from the entry price.